Hello and welcome to another episode of This Week in Global Development. That's our weekly podcast where we talk about all the headlines in global development. We're in a little bit of a different venue today. It is World Bank annual meetings, IMF annual meetings week here in Washington, D.C. And today is Devex World, our big conference. And I'm joined by Tariye Gbadegesin. Gbadegesin, okay. And Tariye, it's so good to meet you.
Nice meeting you.
Thank you for taking time to be part of this discussion today. You are pretty new in your role running CIF at the World Bank. Maybe just tell us a little bit about CIF real quick before we get started.
Sure. Well, the Climate Investment Funds, which we call the CIF, is a $12 billion concessional climate finance fund that was founded by the G7 in collaboration with the G20 and MDBs in 2008 to tackle climate change, but really starting off with clean energy, looking at how to support MDBs in investing in clean technologies, as well as hard-to-finance areas such as forestry, resilience, and areas requiring an urgent response.
Yeah.
We're comprised of two main funds. One is the Clean Technology Fund that invests in energy system transformation, and a more specialty fund that focuses on, like I said, nature or resilience. And what we do take pride in is that we don't invest in just projects or programs, we invest in systems. So we work with countries in partnership with our MDB implementing agencies to invest in transformational system-based climate action.
Okay, well you're pretty new in the job. You just joined in March. You moved to Washington for it from Nigeria, but you had a lot of experience in the space. A big theme this week our reporters have been covering is the climate discussion. You know, we're always looking ahead to the next event, and obviously COP, there's a COP happening on biodiversity in Colombia, but the COP in Baku is coming up, the climate COP, in just, I guess, a month or so. What are you hearing at these annual meetings on your issues around climate? What's the discussion been like?
Sure. Well, it's been an interesting inflection and continuum in respect of the multilateral development banking reform frame, which is seeking to drive greater ambition from the multilateral development banking system to fund what we call the tri-crisis, the climate, debt, and health.
Yep.
And that has dovetailed into a challenge on greater coherence and collaboration by funds such as the CIF, alongside other dedicated climate funds. They're also called multilateral climate funds, to do more with the funding that we have,
right,
to be more efficient with our balance sheets, unlock more funding. So if you've heard certain institutions unlocking another 10, another 100 billion, being smarter with the capital that they have, leveraging more. So that's a very big deal. That affects us because we're, figuring out how to leverage our 16-year track record to enhance funding sources. So this week is all about quantum. How do we get
right
more? The week is also about quality, because it's one thing to bring in more funding into climate finance. It's another to have the quality of funding that can make impact. And we're a concessional catalytic fund provider. We lend at very concessional rates. This means up to a 40-year tenor, maybe 70 basis points to 1.3 basis points, all in.
Wow.
10-year moratoriums.
So you can borrow for 40 years, you pay 1%.
1%, exactly. And we blend that with the multilateral development banks to deploy large sums of money dedicated to climate finance. So we are very much at the front of this issue of quantum and quality through how we're trying to leverage our balance sheet. We're going to the capital markets. We're the first multilateral climate fund to do that. And we're also focused on continuing to invest the way we do with this sort of long-term, low-cost funding that adds that high-quality funding to the system.
It's a pretty tricky moment, I find, these annual meetings, and we've been reporting on it, because we're just a few weeks before the US presidential election. Politics are shifting so much that, well, we used to be able to count on growing budgets from traditional donors, Germany, France, whoever. It doesn't look that way now. You're seeing cuts kind of across the board. You know, climate maybe is a slightly different place. There's more momentum around the climate issue, but how does it look to you from a finance perspective? That's what the next COP is meant to be all about. It's the finance COP. Do you think they're going to be successful in raising the money needed, given what you've heard, the conversations you've had this week?
Well, you've said many things. You've combined issues around sustainable financing sources for climate, targets and objectives for greater ambition with funding climate finance. And these are all the things that the Baku COP is aiming to deliver. So one of the key objectives of the Baku COP is to deliver a new NCQG, which are basically national quantified goals for how we're going to deliver on climate finance. You know, the reality is that, you know, there are going to be challenges with raising these large sums of money because budgets are stretched for multiple reasons, right? Some of it is political, some of it is economic, some of it is security, you know, security challenges. We have multiple.
Spend a lot of European countries spending more on defense.
Absolutely, absolutely. And so what that means is that we have to focus on when I say capital efficiency, it's another way for describing multiplier effects on core funding. And so the CIF over the last 10 years has had capital mobilization as one of the KPIs when we fund MDB. So for every dollar that the CIF puts in as concessional capital, we encourage, require, coerce the MDBs to bring in another $10, and we have that track record of delivering those type of co-financing.
And is this because you are able to provide that kind of junior debt that's more
lower priced debt? So we're able to provide lower priced debt that can buy down certain viability gap requirements. It can buy down certain costs so that we can lower the cost. So for example, we'll buy down the cost of a tariff so that it's comparable to a less clean source of energy, right? So those are the types of things that we do. But I'd like to highlight that you know, the need for concessional funding in this space really is something that is going to remain top of mind for everybody. And one of the areas that we have to also think about is what I would describe as the capital stack for climate finance, right? You need to have funding that is going to go in as grants, funding that goes in as concessional debt, bringing in the private sector. So that's going to be a big focus area because we've got to figure out how to bring more funding into the battle. You know, we have $400 trillion of private capital, and our funding gap for climate is $2.4 trillion for energy transition, $4 trillion per year for energy transition and SDGs. So now if what we need to do is figure out how to create that capital stack of funding where we're able to get 10 to 15% from the private sector to come alongside MDB funding underpinned by concessional finance. It shouldn't be, it's not hard to do on paper or in a financial model, but it's really hard to do in
real life.
practice.
It's hard, right? Yeah, because I mean, obviously bringing in money from the private sector into development issues has been a long-term goal, but if you look at the numbers, it's been pretty unsuccessful. You know, I think infrastructure, private sector finance for infrastructure peaked in 2012 and has come down since then. It's just been very hard to do it. As you say, on paper it should happen, particularly when we think of the climate crisis. And I think if you have capital stack on your bingo card this week, you win, because that's all I'm hearing is people talking about the capital stack. And it's a way of thinking of funding projects where you have people willing to take a loss, right? People willing to provide a grant, which then allows someone else to come in who might need to get their money back, but they don't need a big return, like you, like the CIF. And then others to come in, private sector, pension funds that might need a really secure kind of senior debt where their money's gonna come back and the risk is low and they're gonna get a market rate on it. And if you can make that all work, there's a chance you could really see these the billions to trillions agenda. But I don't know how you feel about it, but I hear a lot of skepticism from people who say, I've been hearing about billions to trillions forever now. Why isn't it happening yet? What do you say to those folks, and are you hearing that kind of discussion this week too?
I hear the discussion. I'd like to hone in on your point about the private sector. I'd like to give them a little break when it comes to...
And you come from the private sector, right?
The private sector, exactly. You know, if you think about 2008 when the CIF was formed, we didn't have solar and wind projects that were absolutely bankable without some form of blending. In fact, at the time, I was trying to finance solar. I had my first wind IPP, commercial wind IPP, that was just still under development at that time. And the space for solar and wind required catalytic funding from the CIF to mobilize MDBs to invest in baseline solar and wind. Today, we don't need catalytic or concessional funding
It's cheaper than fossil
to
fuel
finance
investments, right?
solar and wind in most OECD countries. This
Right.
is the main foray of the private sector. Prices are going down. The cost of technology has fallen dramatically.
Yeah.
The cost of financing for that has dropped dramatically. You're actually seeing in countries like Africa where there's actually an increase in renewable energy expenditure. So the issue is really where we are in the technology curve and where we are in accelerating the innovation. And so now the issue is we've got to do even more. So while solar and wind is now under the purview of, every normal financial institution with standard fare, we've got to push forward into the next set of technologies that will drive the transition. The CIF has just recently launched industrial decarbonization and green supply chains as a program. We're making up to $1 billion available. And this is very much in line with our mandate, which is to invest in technologies of the future to fight climate action today.
Give us an example, like
And
what's
I'll
a
give
technology?
you an example. So the Industrial Decarbonization Fund will invest in green steel, green cement, green hydrogen. If you think about the deadlines we have, 2030 and 2050, we need to reduce industrial emissions by 20% by 2030 and by 93% by 2050. In fact, because of all the progress we're making with renewable energy, after 2030, our biggest problem is going to be industry and not necessarily energy. I mean, you must have heard the UK closed their last coal plant just a couple weeks ago.
Yeah.
So the future challenge we need to battle is how do we clean up how we produce steel and how we produce cement, especially because emerging markets and developing economies have to keep growing and they're going to keep building, right? And so we've got to make those technologies cleaner because that's where we're going to have a challenge. What's exciting? The technologies are there. They're the solar and wind of 2008, right? And that's where we are right now, which is how do we buy down certain costs? How do you think about offtake? How do you think about integrating these systems? We already see the green shoots. So just a few years ago, we launched a renewable energy integration program focused on grids and transmission. Through that, we actually have a green hydrogen project in Brazil that we've already tested. And check this out. That project has such a significant amount of private capital. We have, I think, a 1 to 100 mobilization rate for that project.
Amazing.
So the other cool thing about industrial decarbonization, it's a great place for the private sector and private capital to invest because there's so many high quality counterparts in the industrial space. We see this as a great way to introduce private funding into the energy transition.
Yeah, it's a way for companies to lower their costs over the long run and to build some more resilience, right, into their business. They're less dependent on supply chain shocks, right? With green hydrogen, you're using solar or wind to produce a fuel that you can then store and use when and where you need it.
Absolutely.
Yeah, there's a lot of potential there. For people, is this your first annual meeting at the World Bank and IMF? I know you worked at the IMF before, but have you been to an annual meeting
I've been to a lot of annual meetings, and I have led contingents to the annual meetings, and this is my second annual meeting as the CEO of the CIF.
So for people who aren't as familiar with annual meetings, maybe people listening to this who've never been to a World Bank IMF annual meeting in DC, what is it actually like? What is the goal this week for someone like yourself? Is it the official sessions where we're hearing speeches from leaders? Or is it things happening in the hallways, bilateral meetings? Like, what's the actual vibe and environment like for you?
Well, I may have a different perspective, and I think the reality is that with all of these type of convenings, there are very different types of organizations that come for different reasons. We at the CIF use the annual meetings as working meetings. So this is a very productive week for us. We spend a lot of the time in bilateral sessions, either with countries that we're progressing a funding for and we need to iron out some kinks. We'll use this week for conversations with our MDB partners on, again, certain initiatives. We also use a lot of the time with engaging with our contributors. So you have contributors that are focused on certain themes. There's also, this is also a great opportunity for us to have conversations about emerging areas of funding need. And then really the biggest theme that you address during the World Bank annual meetings is finance. It's the meeting of the finance ministers. Yep. And so it's a great opportunity to look at new financial instruments, new structures to address broad-based economic and global economic challenges. And now that climate is a central global economic challenge with an increasing, if not required, need from ministers of finance to be part and parcel of that engagement, you really see climate finance becoming a very central discussion point in annual meetings as well.
Yeah, I think you're right. We hear a lot about that in some of our reporting this week. Keeps coming back to the issues you brought up to start with. Debt and climate are really interlinked here, and the world is trying to grapple with sort of the moment we're in politically and what that's going to mean for this space. I think everything you said is just right. I would just add to it, these annual meetings are also about narrative setting. And everyone meeting each other at dinners, at events like this, at Devex World, and saying, hey, what are you hearing? Where do you think things are going? And it's early yet, but my sense is there are some green shoots, to use your word.
Yes.
There's a sense of some real possibility coming out of these meetings.
Absolutely. I would sort of build off that and touch on the point of opportunity. And I think that is the word that I think we're not all quite ready to make a linchpin, but I do think that we are getting to a point where I think there's some level of excitement as to, can this mean additional opportunity for either countries to grow and expand or transform. And that's sort of what's even happening with this industry work that we're doing, is sort of shifting out of climate and financing for climate just as something that we have to do, but something that would really be great for all of us to do.
Yeah, that adds to all the other objectives.
Exactly.
Whether it's economic development or health or education or you name it.
Exactly.
Well, listen, it's been great to get some time with you. This is a week where, of course, Devex journalists are all over this town, including here at Devex World, so there are lots of stories that are worth checking out in the newswire this week. And I want to thank everybody who's joined us for another episode of This Week in Global Development. It's been great to be with you.
Thank you.